Europe's biggest economy may also be its weakest. High energy costs, feeble global orders, and record-high interest rates took their toll in 2023. Add to this the continuing drain of war in its backyard, the strain of integrating incoming waves of immigrants from impoverished lands, a loveless political coalition struggling to govern, and everything in between covered in red tape. To top it all, the country's top court threw out the 2024's budget plans, leaving the German economy staring at a billions of euro funding gap. Is the German economy on the brink of collapse? In January 2024, German farmers kicked off a week of nationwide protests against subsidy cuts. They blocked roads with tractors and piled up misery for Chancellor Olaf Scholz's coalition as it struggled to fix a budget mess and contain rising far-right forces.
Make it clear that we need to take decisions in this area, and that means removing subsidies.
Across the country, in nearly all the 16 German federal states, protesters clashed with police.
Police who are using water cannon to try to control them.
Sub-zero temperatures were no hindrance as convoys of tractors and trucks blocked off German roads and Autobahn exits. The protests broke out following the government's decision to phase out a tax break on agricultural diesel. Farmers complained that the plans to end the two tax breaks, that collectively saved German farmers 900 million euros a year, would unfairly burden them and send them out of business. Trouble had been brewing for some time. In December 2023, as an indication of their mounting frustration, farmers dumped manure on the streets of Berlin. A nervous government tried to pacify the irate farmers by watering down its fiscal plans that had come about when a court ruling left a 60 billion euro hole in the budget.
60 billion euros suddenly cut from the budget.
Court ruling blew a 60 billion euro hole in its budget.
The ruling held COVID-19 funds could no longer be used for policy-related incentives and subsidies.
Where the 60 billion euros which were planned are no longer available.
This meant tax breaks for agriculture had to go, but the farmers didn't see why they would have to suffer.
Increasing the road tax, increasing the price of diesel and so on. No one can afford this anymore.
The new year saw a week-long siege of Germany as tractors, reportedly 100,000 of them, and trucks invaded the countryside. Berlin was once again brought to a near standstill. Angry farmers tried to storm a ferry that had German Vice Chancellor Robert Habeck on board, returning from holiday.
A German cabinet minister had a scare when protesting farmers prevented him from disembarking.
A disturbed Habeck put out a video message saying, "Calls are circulating with coup fantasies, extremist groups are forming, and ethnic nationalist symbols are being openly displayed." The immediate impact of the protests took its toll on German industry and the economy. Volkswagen's production lines at its Emden plant ground to a standstill. Protests spread to storage and packing facilities belonging to Amazon.
Workers for internet retailer Amazon in Germany are holding their third one-day strike.
And the discount supermarket chain Aldi, as employees demonstrated against poor working conditions. A rail workers' union announced their own three-day strike, stopping all trains, both cargo and passenger, in their tracks.
Well, Germany is facing its most disruptive strike action in 30 years.
This is the biggest strike Germany has seen in decades.
The rail unions demand working hours to be brought down from 38 to 35 hours per week, a pay hike, plus a one-off inflation bonus. The shaky foundations of Germany's economy. Germany is the world's third largest economy, with a GDP of 4.121 billion euros in 2023, making it Europe's largest, globally behind those of US and China. Labor reforms by the end of the 1990s, followed by surging demand in China and developing markets around the world, helped create millions of jobs and drove strong economic growth in Germany. Exports of motor vehicles, auto parts, and chemical products strengthened the German economy, with the service sectors contributing 70% to the GDP, making it by far the largest shareholder of the country's economy. But lately, the largest economy in Europe has started putting investors off due to the current deterioration of Germany's situation as an economic destination. German manufacturers are suffering from the slowing down of trade with its biggest trading partner, China, which has itself been experiencing a contraction. Some blamed Germany's recent economic faltering on the drying up of gas imports from Russia, a fallout of the war in Ukraine. The shutoff of Russian gas in 2022 contributed to inflation spiking and cost of living going up. But even though energy prices have fallen back to 2018 levels, the economy is still feeling the impact. The German construction sector is reeling from cancelled projects and insolvencies after being hit by rising financial and material costs. Housing construction is suffering from a drop in demand due to high mortgage rates and rising costs. Industrial production in Germany contracted by 2% year-on-year in 2023 due to declines in energy, chemicals, and steel sectors. The German steel industry is a reflection of the general economic situation in the country. For the second year in a row, the industry is in decline. Germany was the only G7 economy to shrink in 2023, and according to latest IMF projections, it is all set to be the slowest growing G7 economy again in 2024. Due to unfavorable business conditions, German companies have started to think about relocating their production facilities to other countries where they might have an added benefit of a workforce at cheaper prices. The labor dilemma: immigration versus skilled workers shortage. The German economy is facing an acute shortage of skilled workers to power its industry and businesses, a shortfall that has not been made up, as expected, by an open-door policy on immigration. This despite a survey in 2019 which showed that every sixth person in skilled employment had not been born on German soil and 1 in 20 had entered the country since 2007. Immigration has long been a divisive subject, both in terms of social welfare and economic development. Images of Germans welcoming Syrians at train stations across the country were broadcast around the world.
Germany and Austria welcomed thousands of refugees and migrants with open arms.
From 2015 onwards, millions of migrants, mostly from the Middle East and Africa, poured into Germany at the invitation of then-Chancellor Angela Merkel. With Germany having an aging population, the influx was meant to be an economic promise for the future. The influx of working-aged migrants was heralded as a key to keeping Germany competitive, providing tax revenue and keeping services funded. But despite this, the growth rate of Germany's labor force is expected to drop more than in any other G7 country. Germany's labor market, to sustain its current rate of economic growth, needs 400,000 new workers annually. Yet localities hosting large immigrant numbers are already under strain to house and integrate the new arrivals, resulting in a cost of living crisis across Europe's largest economy. And this is just the beginning, as official estimates suggest Germany's aging society will be short of 7 million skilled workers by 2035. Germany's economy faces 3 major challenges: declining exports to China, high energy prices, and rising military spending. The US-China trade war has impacted German exports. Supporting NATO in light of the war in Ukraine has increased Germany's military spending, draining crucial euros that could have been used to fund economic projects. Military expenditures are also hastening Germany's decline. According to Greenpeace, over the past decade, Germany has increased its military spending by 42%. Economic think tanks have downgraded Germany's growth potential for 2024. The Munich-based IFO now expects Germany to grow by 0.9% instead of 1.4%. RWI, Leibniz Institute for Economic Research, cut its forecast down to 0.8% from 1.1%. DIW Berlin, the German Institute for Economic Research, dropped its prediction to 0.6% from 1.2%. Economic forecasts. Grim projections for 2024. 2024 began on an ominous note for the German economy. As tractors blocked roads and trains across Germany stopped, a rolling protest by farmers continued in front of the iconic Brandenburg Gate. The demonstrations attracted workers from beyond agriculture. Thousands of tradespeople, from heating engineers to plumbers, joined in, angry over high energy costs. Demonstrators from the hospitality industry were there, demanding the withdrawal of high VAT increases on restaurants. Germany's finance minister, Christian Lindner, told thousands of jeering protesters that there was no money for further subsidies. The EU's biggest economy is floundering even as the coalition government, led by Chancellor Olaf Scholz, staggers from crisis to crisis, itself on the brink of failure. With subsidies drying up and the prospect of recession continuing into its second year, the German economy, despite being the biggest in the European Union, faces a very real danger of actually becoming the sick man of Europe.